Good afternoon, everyone.
Good afternoon.
Good afternoon. Good morning, good afternoon, good evening, depending where we are. My name is Benedito Morambiri Jr. I'm an investment manager at FSD Mozambique. We're moderating this session. This session is on short-term and long-term financial instruments to build resilience. The role of insurance and micropensions towards financial resilience, low-income groups. Let quickly say a few words around why this session. When people talk about financial resilience, they tend to focus on the ability of individuals, households, organizations, or even economies to withstand and recover from financial shocks, stressors, or disruptions. It encompasses normally both short-term strategies for managing unexpected economic changes and long-term planning to maintain financial stability. Additionally, there is a tendency to focus also on issues like diversifying income, debt management, financial planning, adaptability and agility, and also access to credit and others, but less on issues related to savings, issues related to insurance and risk management. Why this is important? When you look at the statistics, we found that only 10% of people in low-income countries have access to insurance. When it comes to pensions, only 8.5% in Africa, while globally 38%. So clearly, there is a low level of coverage, and clearly insurance and pension systems, particularly micro insurance and micro pensions, can really play a crucial role in providing this financial resilience for this population. However, realizing this potential requires enable ecosystems which support regulatory frameworks, investment strategies, and also best practices that allow, in fact, for this sector to provide. Clearly, financial resilience is crucial for adapting external pressures like natural disasters, like market volatility, like economic downturns, and issues that really affect the households and the economy. When it comes to Mozambique, FinScope survey from 2019 reveals that only 11% of adult population have access to formal insurance, and highly perceived as an affordable for the majority of adults. When it comes to the pensions, only a small fraction of population have access to that. They've been mentioned around 10% coverage, and big challenge still in the informal sector, in which most of the working force is there. So financial sector in Mozambique, recognizing this challenge, established a partnership with the Insurance Supervision Institute to promote development of comprehensive and sustainable micro-pension ecosystem in Mozambique. Clearly, this partnership is aligned in terms of objectives in both parts, and we are keen to have some sort of response for this particular issue, for this challenge in Mozambique. So this session will delve on ecosystem and institutional factors that need to be explored to realize this potential, and micro insurance and macro pensions in Mozambique. Specifically, we'll try to explore the current status of ecosystem and microinsurance and micro pensions. We'll try to understand institutional regulatory factors that enable and the growth of these financial services. We'll also touch some best practices and case studies around this issue. And finally, we'll see how government and regulatory bodies can also foster inclusive insurance and pension systems in countries, low-income countries, we can say generally. For that, we brought 4 excellent panelists. to be part of this conversation. I will start by presenting you Mr. Chalamba. Chalamba, which is the Chief Financial Officer of Sanlam Mozambique, with over 24 years experience in insurance, pension management, investment management. And they are the service providers, they are practitioners. They will share with us insights and challenges and opportunities to serve low-income groups. We expect also to share some success stories in this area, not only for Mozambique, but also for other countries in Africa. We do have Leonilde, which is the head of insurance department and life branch operation in the Insurance Supervision Institute in Mozambique. Also with qualifications in the insurance and pension funds. Among other activities, she is currently coordinating prudential analysis of life insurance companies and also supplementary fund management entities in the country. Leonilde will help us to address the role of regulatory bodies in fostering financial inclusion tools to build resilience to low-income segments. So we do have also Popekolokaji Soko, which is the General Director of Financial Intelligence Agency in Botswana, where she actually oversees the process of safeguarding guiding the financial system from illicit use of combating money laundering and related financial crimes. Mrs. Soko has been instrumental in shaping financial sector regulation and policy in Botswana, but in the region as well. And they've done also work already in Mozambique. During the past decade, he worked also in developing cost-effective and inclusive pension systems and appropriate policy and regulation for this particular sector. In that capacity, her primary clients have been national governments in the region, particularly those that have identified the need to build inclusive pension systems. We do have Lemmy Manje, he's back, Lemmy Manje, who actually is the CEO and founder of FinScope Solutions, based with the office, I would say, in Rwanda and Zambia. Lemmy is an inclusive insurance, inclusive finance expert with a lot of experience in providing financial services, inclusive financial services for different institutions in different countries. He has been working in Africa, Asia, Europe, and Lemmy will be sharing with us information related to the current state and challenge of microinsurance and micropensions in serving low-income groups, as well as how can product design be more inclusive and maintaining profitability for the service provider. So we expect to have such excellent panelists. We do have 4 panelists here, and I would start off with you, Lemmy. But before that, just to inform the audience that you can introduce in the chat your name and where you are, and also like to remind people that questions, thoughts, and examples can be also put in the chat. So without further ado, I'll start with you, Lemmy. You have been working in inclusive insurance and micropensions in Africa, not necessarily only in Mozambique, but in Africa, in Asia, and Europe as well. Can you share with us biggest challenge in scaling these financial services for low-income groups? How can products be designed to be more inclusive while maintaining at the same time profitability and for users? Please, Lemmy, if you can share some insights with us, we'll appreciate it. Thank you.
Thank you so much, Benedito, for laying the scene and also for the introduction. It's a pleasure to be on this panel to discuss this very important aspect when it comes to how do we get people to become more resilient amid this all the risks that they face, short-term and long-term. You're right in terms of statistics. I think the protection gap is quite low. The recent landscape for microinsurance shows that the gap is currently at 88.5, which is actually speaks to what you said, around 90% there in terms of protection gap. Only about 11.5 globally covered with low income or inclusive insurance products. So yeah, I think the challenges around the globe are very similar. I mean, low awareness, appreciation, low experience. People do not wake up thinking about insurance, and insurance is an intangible, quite unattractive to low-income people who actually are always battling to make ends meet. The products have largely been focused on corporate business, or should I say large to low, medium to high income earners, and therefore private sector doesn't naturally go down to these low income market segments. However, despite that picture of low awareness, low understanding and appreciation of insurance, we have seen over the last 2 decades, especially, that some insurance have been very innovative to actually go down the market and serve these low-income market segments. Number one, in terms of success factors, of course, is scale. You need quite a lot of scale. I mean, huge scale to really make it viable. As we know, microinsurance, for instance, including micro pension, they are all low income or tickets, you know. So the premiums are low, the contributions, if it's micro pensions, is also quite low. So you need scale to really aggregate these funds. And to do that, I think what has emerged as evidence in terms of success drivers, the first one is customer centricity. So the private sector needs to invest in understanding these low-income market segments and tailor the products according to their characteristics, and which might include their income levels, the regularity of income, the exposure to risk, and also their understanding of risk management, and also identifying which channels as well they can effectively reach them. The second one is simplicity of products. So this low-income market segment is largely characterized by low literacy levels and low education attainments. So they won't understand the complexities of these products. As you know, both micro pensions and the microinsurance or insurance by design has a lot of terminologies, which of course insurers would be proudly, you know, associated with. But when it comes to this market, you need to simplify things, and we've seen a lot of innovations around even trying to use local language to communicate the products. The next one is, of course, technology, and technology is really seen on two fronts. One, on enrollment, how can you enroll these people at a low cost? And then secondly, how can you service them at a low cost? So when it comes to claims processes, how can you simplify those processes, use technology to make sure that it's quick? And of course, the last one is education. Again, you can't run away from educating people and improving their awareness and understanding of these risks. So a combination of those has been seen to be drivers of viability, and we've seen that there are now insurance companies that are actually providing micro pensions or micro insurance very profitably. And of course, like I said, when it comes to customer centricity, you also need to ensure that you are designing products that speak to their needs, speaking to what keeps them awake at night, as opposed to the usual pattern of boardroom products and trying to see if people will buy them. I'll stop there.
So thank you very much, Leme. You just raised a few, I would say 5 key drivers for for the success, I would say, of these particular services, like scale, the risk management, simplicity, technology, and also the financial education as key factors. I would like them to move on to we have challenge with Nzi. Chalamba is not there at the moment as one of the practitioners, as a service provider. I would like to ask some questions, but looks like he had some challenge with technology. So I'll then move to Mrs. Soko. Ms. Soko, Soko is there. The regulatory environment necessary for the effective deployment of microinsurance and micropensions has been indicated as one of the challenges. Although Leme didn't brought it up, but normally in literature, this is one of the challenges also mentioned by the practitioners. Based on your experience from developing countries, including Botswana and Mozambique, what you would consider regulatory frameworks essential things to foster innovation and ensure commercial consumer protection from one side and another side, to ensure that you have in place proper policies, you have in place also enabling environment that allows for these products to grow. Can you share insights into countries where this regulatory environment has been successfully supported for inclusive products? Mrs. Soko, please.
Thank you very much, Benedito, and good afternoon to the participants and the people who are listening to this program. My apologies, my camera is giving me issues, so I'm not able to show the face. I believe that you will be able to follow the discussions though. In terms of the regulatory framework that will foster innovation, I think the starting point is for us to realize that a regulation or a policy, maybe let's start with a policy, is normally made to address the issue that is on the ground. So you don't just come up with a policy that does not have anything it should be addressing. So the issues that Lemmy has indicated for before will be the issues that will then force the policy makers to think around those issues, to say, okay, we have a large number of people who are not covered by the pension fund. So what is it that we can do to make sure that they are covered? And that issue will then have two points of reference. The first point of reference is the economic or the policy perspective, to say that as a country, what is it that we want to achieve? First of all, we know that the world is aging, Africa is aging, Mozambique is aging, Botswana is aging. This means that in the next 10 years or 20 years, the number of people at the age of 65 and above would have increased. So the economic or policy question that then you will have to ask yourself is, will the government then be able to take care of those people as they age, to give them a dignified old age life? And there are some international protocols that actually forces policymakers to be thinking thoroughly along those lines. Because if you look at the ILO and other related institutions, they tend to be putting a perspective to countries that social security is actually a human right. So everybody should have access to social security. So countries, then you are forced to put together policies that will be able to address that issue. And then the second perspective will be from the recipient point of view, the policy, that the people that you are making the policy for. Will those people be receptive? Will they accept the product if you want to put it to them? And now this is where the issues that Lemmy was talking about has to come into play. First of all, is there any appetite? If the appetite is not there, what is it that you do as a policymaker to try and stimulate the appetite? Issues of awareness, education is very important, because then people would need to understand why they have to save in this manner while they have been saving in other manners before. So the simplicity of the product, the simplicity of the language, also taking into consideration the point that we are dealing with a sector that might not understand the issues at the level at maybe the informal sector will understand. So the policy then will have to address issues from that perspective of the policy perspective, and also a consumer perspective. The issues that are currently a burning point in the policymakers and the micropension space is issues of coverage. I think we have spoken about that one earlier, which came about as a result of the structure of the pension system when it started, because in most countries, including even the developed countries, the pension system started in the formal sector. So in countries like ours, where the informal sector is big, then we find ourselves with a bigger number of people not covered or low coverage rate. And then another important issue to consider from a policy perspective is also an issue of adequacy. If you put together the pension system now, will the income that somebody is going to earn be adequate enough to give that person a desirable standard of living? So the adequacy then will trickle down to a lot of other issues in terms of how much is the contribution. If these people cannot afford this contribution, is there going to be any government intervention to assist? So it has got a lot of other things underneath them. And then related to the subject that we are talking about today in terms of resilience is the issue of sustainability. How do we build the pension system in this vulnerable group and make it sustainable so that it can be resilient even to the short-term shocks, microeconomic short-term shocks? I think for now, let me stop here. It was just to lay the foundation in terms of, from a policy perspective, if you put together a pension system, a macro pension system, and you try to put together the regulation, all those things need to be taken into consideration. Thank you.
Thank you very much, Mrs. Soko. It's clear that you bring here key attributes in building this pension policy. You did mention coverage, adequacy, and sustainability as key elements to take really in consideration. And also you mentioned the policy and consumer point of view as part of the policy also, when we are trying to create this framework that will enable the microinsurance and micropension. So I then move back to the private sector. Let's to the practitioners by asking Mr. Mdzie. Basically, Mr. Mdzie, you have operations worldwide, also in Mozambique, and you might have experience from microinsurance and micropension in other markets as well as service provider. Could you please share main barriers to participation by low-income groups in these particular products, and how can they be overcome? I would say, whether within or in our market or in other markets in the region. Could you please share some, if you have a few success stories as well of microinsurance and micropension schemes that succeed? Let me mention some of the drivers, some of the factors. You might have been facing probably the same ones or different ones, and please share with us what you have been doing to overcome them. And finally, if you may have innovative strategies or approach that you are using or you are planning to use to serve these segments, would you mind sharing some ideas with us regarding to that, please?
Okay. Thank you very much, Benedito, and thank you very much for the introductions. I feel honored to be invited to be part of this panel discussion. I think firstly, I would like to start by quoting an article I came across on the internet on the subject of micro pensions. Basically, the reason why I want to share what this article talks about is just to show the potential that this segment of the market has in terms of actually helping insurance companies growing their market share and also increasing insurance penetration. As most of us are aware, if you look at insurance penetration in Africa is quite low, and this segment actually offers an area that has not yet been fully explored by insurance operators. So the article I'm talking about was written by PwC in 2017, and it revealed that if Nigeria's 59.6 million informed sector workers had put aside 100 naira weekly in 2016 as pension contribution, which was invested by pension industry at a real rate of return of 4.5% per annum, Nigeria's micro pension industry would have been worth approximately 61.1 billion naira in real terms at the end of 2017, growing to 1.7 trillion naira by the end of 2020. This corresponds basically to 3.7 million American dollars at the end of 2017 and 1.1 billion American dollars at the end of 2020 using today's Naira USD exchange rate. This basically just goes to show us that there's huge potential and opportunities for financial services sector in this area. Certainly, participation by low-income groups in microinsurance and micro schemes is almost non-existent in most of the low-income countries, and Mozambique is not spared from this challenge. There are obviously several barriers to participation by low-income groups in these micro schemes, but there are also effective strategies and success stories that can spur action to transform the financial service landscape in Africa and around the world. In responding to the question, Benedito, I'm going to highlight what I consider the key barriers to participation by low-income groups in micro pensions and microinsurance, and the strategies to overcome the barriers. And thereafter, I'm going to close by sharing some of the notable successes, or rather notable success stories. Okay. In terms of barriers, I'll start number one. I'm going to look at 5 main barriers, and kindly note that these 5 barriers I intend to discuss are not exhaustive. However, I personally consider them as the main ones. The first one being lack of awareness and education. Many low-income individuals are unaware of micro pensions. They are not even aware of insurance. So there's greater need to overcome this barrier, and the way that you can, the strategy that you can use is basically initiatives in terms of education and awareness campaigns. This can be done by implementing things like community outreach programs that explain the benefits of microinsurance and micropensions in relatable terms. Collaboration between the financial services industry with the government, development institutions like FSD here in Mozambique, and other key interested stakeholders is key in ensuring better outcomes. The second barrier I would want to discuss is trust issues. Trust issues can actually, pose, a great threat to participation by the low-income groups. There can be skepticism towards financial institutions, especially if there have been past negative experiences with providers. So some of the strategies that you can use to overcome this is basically partnering with local community organizations and leaders to promote trust and credibility. Personal testimonials are also important in building trust as well. I'll give you an example. When you start, selling products to these low-income segments to, boost up trust, you could actually use at the time you're setting claims, you could actually use testimonials to educate the masses about the benefits of the products that you're offering to that segment. Also, collaborative efforts are also key to overcome trust issues. So just the same as the initiatives for education and awareness, there's also need for collaborative efforts to ensure better outcomes in terms of addressing trust issues. The third one is affordability. So issues of affordability, I think Boppy and Lemme might also touch on this. There's issue of looking at the pricing of the products. As we know that low-income groups tend to have irregular income, and they often prioritize immediate needs over future savings. So to overcome a barrier around affordability, there is need to make considerations around the pricing. So micro premiums are key to make participation more manageable, but by this segment. In addition to that, offering flexible payment options such as pay-as-you-go models, where customers buy what they really want to buy, which helps with quicker purchase decisions as well. Customers also feel in control because they buy things that they want to use. The third barrier that I would want to discuss is complexity of products. This one obviously is a no-brainer. If products are too complex or complicated, individuals may feel overwhelmed and choose not to participate. So simplifying products is critical. So designing easy to understand products with clear benefits and processes, use of visuals and real-life scenarios to explain how a product or service works will go in a long way to address this barrier, or rather to overcome this barrier. And data analytics is also critical. Utilize data analytics to tailor products and outreach strategies based on specific community needs and behaviors. Both Lemmy and Boppe, I think, touched on this, on ensuring that when you are targeting the low-income groups, you really need to understand their needs, so that whatever products or services that you want to offer, they are tailor-made to meet their needs. So demographics are very key in this area. The fifth one and last one is accessibility. This is very, very critical. So if you look at Africa, for example, it's a huge continent with a large surface area. For Mozambique, I'll give an example. Our coastline here in Mozambique, in terms of length, is 2,700 kilometers from south to the north. And accessing remote areas is always a huge problem. So limited access to financial services in rural or the unserved areas can hinder participation by this low income group. However, there are strategies that can overcome this accessibility. So the first one that comes to mind is mobile and digital solutions. There are a lot of insurance companies, a lot of financial services companies that are leveraging technology to enhance accessibility. Things like mobile platforms can help sign up, pay premiums, or pay pension contributions and claim benefits conveniently. The other strategy to overcome accessibility challenges is community-based models. You can take advantage to offer insurance and pension products to already existing community groups, like the Shitiki here in Mozambique, or village banks that exists in several other low-income countries. This also helps to foster a sense of ownership and trust. So in addition to addressing the challenges to do with accessibility, it also helps to build the trust issues that are already highlighted earlier on. The last one, in terms of overcoming this accessibility challenge, is partnerships with NGOs. So basically, on this one, it will help. It helps to collaborate with non-government organizations by using their existing structures to reach low-income groups more effectively and be able to provide integrated financial and insurance services. I think I would want probably maybe to stop there before I move on to maybe share some of the notable success stories that I've experienced personally and also maybe studied or come across. Thank you.
Well, thank you very much. Thank you very much, Mzi, by sharing these important barriers and how in your experience they are being overcome. So I would like then to move quickly to the regulator. We have here Leonildo Mungwambe. Leonildo, considering what we have just heard from the private sector, how can government balance regulation on one side, consumer protection, and flexibility of these innovations that were already mentioned in products, in services, in distribution channels, in order to encourage more players to enter in this space? Could you share some insights on what are the challenges that, as a regulator, from the regulator point of view, that we might be facing in this contest? Please, Leonildo. We are not hearing you, Leonildo. I'm not hearing Leonildo. No, it's not. Leonildo, did you get my question? Technology challenges.
Maybe before she comes in, while she's still trying to, maybe she's back.
Yeah, I don't know whether the people can hear her or not.
Okay, maybe while she's still trying to fix her issues, let me just come in with one issue where Mr. Shalamba mentioned it, which is very important from a policy point of view. Okay. The availability and affordability of the product that we are bringing to the informal sector. There's a very big policy issue that comes out of that. If you make it affordable, so that it can be available, or so that the net can be wider, you cover a lot of ground in terms of getting more people in. There is an issue of the administrative cost and the investment cost. So if you make it too affordable so that you want to cover more people, you also need to be cognizant of the fact that there still needs to be admin cost and investment cost that needs to be taken into consideration. And if that is not covered for in terms of the policy or the regulation or government intervention, then we might have a problem of sustainability, as we spoke about earlier, and maybe in the future, inadequacy of the pension income. So as policymakers sit down around the table to say, okay, we want to make it affordable, that is a big question that is always lingering around our neck to say, but how do we deal with this to make sure that it doesn't affect the sustainability and the pension adequacy in future? Yeah, I just thought maybe I can, mention that because he spoke about it thoroughly. Thank you.
And thanks, Ms. Soko on this highlight. This is really a very, very important point. Probably I will then stress on the point that I was asking to Leonil, based on your experience as well as a policy and your experience on the regulatory side. You did mention a few highlights around that, but can you elaborate a bit more on this balance between consumer protection and innovation as part of this conversation? Looks like we will not have the regulator with us. How do you see this relationship being balanced within the regulator? Ms. Soko?
Okay, my apologies. Like... I was speaking with muted mic.
Okay.
So, like I mentioned earlier on, regulation flows from policy. You start by laying the policy first, and then you draw the regulation from the policy. So, by the time you arrive at making or trying to develop the regulation, the policy will be there to guide you. So it's not likely that you will find a lot of maybe discrepancies between the two. However, I think it is worth mentioning that regulation and policy in some cases runs behind market development, because the people who are on the ground, they are there to make business. So in most cases, you'll find that the private sector will maybe come up with a product to address a certain need that they would have found in the industry. And then policy has to then come behind them to close the gap, to come up with a policy and a regulation to address what is happening on the ground. So as a regulator and a policy maker, then your role is not to deter market development, but you need to make sure that you close the gap. The gap between them and you is not very far, because if that is the case, then these people are in business. They might bring vulnerabilities to your sector if you don't come in to close the gap very quickly. When it comes to issues of technology, in the success stories that we have seen in Rwanda, in India, and other countries, which we are looking them as our forerunners in this journey, you will find that, especially in Rwanda, they tend to use the already existing infrastructure for two reasons. First of all, to make sure that the people, it becomes not too expensive. Like I mentioned earlier on the issue of cost, it becomes not too expensive. And if it's, and again, the people use the infrastructure that they are already used to. So the success story there also is to develop alongside the private sector.
Okay.
You don't leave the private sector behind. You develop alongside them, because at the end of the day, they are the first line of defense. A lot of education needs to be put in place in the private sector to understand that they will probably need to go an extra mile to make sure that the customers are catered for, both in terms of awareness, both in terms of maybe sometimes a reduction in the fees and stuff like that. So the most important thing, like I mentioned, is to make sure that the private sector is with you from the development. Where is possible, make sure that you use the existing infrastructure and awareness. That's the most important. Yes.
So thank you so much, Ms. Soko, for that. I have another question for 2 minutes each of you on quick question on being your experts in this field. What would you like to see financial sector do better to increase this financial resilience of this low-income population? In other words, do you think that service providers have enough capacity, know-how, resources to fulfill their role in building this financial resilience on their own, or what type of role would you see from institutions or development finance institutions like FSD and other partners in this sector? What type of actions or what would you prioritize in terms of interventions that they would be designing and implementing to increase this low coverage, to increase the penetration of microinsurance and micropension in the market? 2 minutes for each of you. We almost ran out of time, so if you don't mind, I'll start with you, Lenny.
All right, let me get started, and I think I can just use my 2 minutes also to highlight that one of the regulatory issues also, I think, which should be also of concern is KYC, and KYC is very critical. I think in most of the markets that I've worked in, you find that what the regulators want to get from low-income people is actually something that the private sector would not get. So it becomes a barrier. The products are there, but you can't enroll people because they can't meet the minimum. So perhaps that is one recommendation for the regulators. In terms of private sector, I think one of my colleagues, Lorenzo Chang, always says this, that there is no scarcity of financial institutions in most markets, but there is scarcity of those that are willing to actually go the extra mile to go down the market. And I'm happy to listen to my fellow practitioner here really saying that it can be done. And it can be done if you can do a BCD. And we've seen profitable entities actually reaching out. And if you look at even the other space of the banking sector, the micro banking now, it's the banks that have really gone down the market that are really making it, because they have millions of clients. In terms of your question as to whether they have capacity, most of them, they don't have capacity related to serving the low-income market. So they need exposure. They need to be trained. And the training that I would recommend, and this is based on our experience as a company, is really hands-on, getting down to the market areas, getting down to the low-income market, to the farmers, talking to them and really understanding their lives and really their pain points and designing from there. The last recommendation for me is about passion and institutional culture. As long as private sector remains with this corporate mindset and really not thinking about let's develop products to serve people who need the products the most. I always give this as an example. Sometimes people ask me, why haven't you insured this item? I would say, well, my income enables me to be able to replace that item. So if you look at that and you go down to the low-income people, there are so many things that they cannot replace when they are lost. And they actually need more insurance than the middle and higher income. So really, when it comes to the need, I would say actually people at the bottom really need insurance. And if pension providers, insurance providers were really designed to serve the markets where they work in, then they should really be investing more at the bottom end. In the interest of time, I'll stop there.
No, thank you, Leme. Thank you, Leme. I will go back to Leonil. Leonil, I wonder if you get my question when you were with us. So probably we should try to. I will make a different question to you. To be quick, as a regulator, what would you do to balance the need of consumer protection and profitability in the service providers? How would you balance these two issues from a regulatory point of view as a regulator? Can you elaborate a bit on that? What type of solutions? How the SSM has been dealing with this issue? I think we're still with challenge with Leonil. I can see her, but I can't hear Leonil. Yeah, sorry for that. So then I will then ask Nzi, the same question. Do you think, as private sector, you have the willing, the skills, and the resources to serve this segment? What you would expect from development finance institutions or for partners that are really focused on these low-income segments, the government? What do you expect from them to be able to increase your coverage to these particular markets? Any thoughts around that? As private sector?
Thank you very much, Benedito, for that question. I entirely agree with Lemon's viewpoints regarding what needs to be done, what are the challenges, more particularly the issue he raised on willingness of the private sector or the financial services sector to offer services to the low-income groups. So I think going beyond that, I would say that as a financial services company, I think what needs to be done is create more collaborations, because honestly speaking, we've been talking about things like creating scale, making sure that the products that you are selling they are sold at reasonable prices, and for the business it's also meaningful in terms of viability. So collaborations and leveraging technology, I think these are the tools that the financial services sector needs to seriously invest to. A good example is of leveraging over technology is a recent a partnership that Vodacom Pesa has with Sanlam Mozambique, whereby Sanlam in this partnership is selling its funeral plan via USSD on M-Pesa platform as an opt-in product. If you look at this partnership, it seeks to expand access to financial and insurance products for the underserved populations, which will go a long way, not only in promoting financial inclusion, but also improve customer safety and security. So basically, there are challenges, but obviously there are also solutions, strategies that we can overcome those challenges and provide the necessary products and services to these segments.
So thank you very much. We have 5 minutes to go. I wonder whether we still struggling to have our friend Leonil to jump in. Leonil, can you hear me? Otherwise, I will have to move forward to Mrs. Soko. Mrs. Soko, 1 minute for you. Any specific recommendation before we move on to wrap up?
Yeah, I think in the interest of time, let me just say that I totally agree with what my colleagues have spoken about. The issue of partnership is very important. Let me mention the issue of KYC. That is one area that is bothersome in the informal sector. So here in Botswana, we have a project where the private sector has come together to automate that process so that it becomes a little bit comfortable for the informal sector. So I think one thing that we need to bring forward is the fact that government cannot do this alone. So private sector really needs to come to party. I can see that I've overstayed my welcome, but thank you very much.
No, so thank you very much for your collaboration, your participation. So I cannot see any specific questions from I can see actually the chat. I wonder whether there are questions or not in the chat to be direct one of the panelists. But for the interest of time, actually we have 3 to 4 minutes. I would say that we have been able in this session to cover the main challenges of providing microinsurance and micropensions to low-income segments. There are issues and that can be overcome. It was clear for all of us that these issues can be overcome by private sector, of course, in collaboration with the regulator, collaboration with the NGOs and also with technology. There are light that KYC is one of the big challenges, needs to be facilitated. There is also need to highlight the issue of technology, which is key. Normally, what we have seen based on the experience that were shared here, the mobile money and digital has been one of the enablers to serve this particular segment. Clearly, and it was also highlighted that there are I would not say lack, but skills and disposal are needed in the private sector to better serve this particular market. I was expecting to hear challenge around the patient funds, but it seems that there is no challenge on that, and also entities available to provide. There are, but we have to probably invest more on the willingness. That was mentioned as one of the challenge as well. And on the regulatory side, it was clear that we need to consider that regulation come along with the innovation in the private sector to make sure that they can implement the developments that are mainly leverage the technology and use of these tools to serve this particular market. On the policy, it was also clear that we need to make sure that the policy must be related to the context, clearly. And there are highlighted 3 main issues: coverage, adequacy, and sustainability as key in policy design. So I think my indication, we are almost on the time, but clearly in micropension, we have also to understand, because we have a large population of informal sector, people working in the informal sector in countries like Mozambique and some developing countries, we have to consider their characteristics when we are planning, a pension, especially a micropension product. And clearly, there is a need also to make sure that we understand specific issues and specific regulatory frameworks to make sure that the product can prosper. I think we have also benefit from a very good conversation on innovative ways or strategies to approach this market, and where highlighted community-based models, highlighted also is around data analytics, partnerships, and also there was a success case indicated here in partnership between M-Pesa and Sanlam in providing funeral insurance for low-income segments. Hope that more products will come, especially focus on micro pensions, which was one of the key aspects for our conversation today. I'm not sure if I'm right, but in my time we don't have much time, so
there's a question. Okay. On the chat. Yeah. So the question is, could Mzia talk about keys to successful cooperation? I think, for example, Sanlam and M-Pesa. So if I understand this question very well, is what are the key issues that were under consideration to make this partnership a success? So
Yep.
So if you look at the product, the funeral plan that I mentioned that we're selling through Vodacom Pesa, it's largely targeted to the low income groups. We've talked about issues of scale to make sure that when you start selling to this segment, the business is viable. That's number one. Number two, we've also talked about issues of cost and price. So for us to be able to reach out to this segment, we came up, with Vodacom and formed this partnership. But the key issue that helped, this partnership or collaboration is leveraging on technology. So if you look at our administration system, it's actually linked through APIs with the Vodacom Pesa platform. So technology played a very key role in ensuring that this collaboration works, and we are able to offer the products to the mass market. So for me, I think other than having people with the same mind between ourselves and Vodacom and the same willingness and interest, these tools really helped in making sure that we're able to deliver on the partnership. Thank you.
So thank you very much. I wonder whether our time is over. So I'd like to thank you all, the panelists, for this excellent conversation, and also thank you for our audience to be part of this session, and hope that we are available to continue answering the questions that you may have. You can send us through chat or through email. So it will be a pleasure for us to respond to all the questions. So thank you very much. See you next time.
Thank you.
Thank you.
Thank you, everyone.
Bye.
Thank you.
Thank you.